Hi guys, welcome back. It's LSP. It's currently the 17th of June 2018. Sorry, 2019. My brain's gone numb. At 2:38 p.m. GMT time. I'm going to try and keep this brief. I don't have my headset with me, so I apologize if the fan kicks in on the MacBook Pro and makes a lot of noise. I'm going to see if I can. I'm away from home basically for the next couple of weeks, so I'm going to see if I can get myself a replacement headset, something to use while I'm out and about. But basically, what I want to do is I just want to quickly go over something, and then I'll show you a trade that I've just opened. We'll see a little study trade. But basically, what I've done is I've got the monthly chart of the dollar index, and just to bear in mind, if you just look up here where the cursor is, this is the September contract. I've told you before, obviously, that I use the futures contract when I'm looking at the dollar index. I find it more beneficial. I'll just say it like that. I've always found it easier to use than the actual spot price. So it is what it is. That's just because sometimes people look at these charts and they send me emails and saying, "Well, my chart looks different to yours," and that's cool. The disparity is not that much, to be honest. Um, but that's September. So we've got the monthly chart, we've got the weekly chart, and we've got the daily chart. And I've noted some things. And what I want to do, just want to quickly go over something. When you're looking at higher time frame stuff, like this is the monthly chart, okay, it's very easy to get lost between the monthly, the weekly, and the daily. Okay, not really sure, what's going on, which way to go. Okay, I'll say right at the start, always err on the side of the highest time frame. Okay, but you have to understand the relationship between the time frame, okay, and then the time frames. Okay, so right now we're looking at the monthly chart, and obviously, this is a monthly chart. It may take months and months and months for anything to happen. 6 months up to a year for anything to actually happen. On the chart itself. As you're looking at it from a month to month basis. But then when you look at the weekly chart, obviously, see we have a little bit more information. Then when you look at the daily chart, you can see that we have even more information. Okay, so you have to understand, the time it takes for things to happen on each respective time frame is longer, yeah, or shorter, depending on which time frame you're looking at, and that's very important. Okay, so when we look at the monthly chart, we see, let me just put that back. When you look at the monthly chart, you can see what I'm trying to get at is this: are we bullish or bearish dollar right now? Okay, that's effectively what we're looking to kind of deduce when we look at these charts. Should I be looking to go long or should I be looking to go short? Okay, or if you're using it as a directional bias tool, to trade foreign currencies. Obviously, are we in a buy program, a sell program? Is it a bullish bias? A bearish bias? Should I be going long? Should I be looking to go long, or should I be looking to go short? Okay, so with that said, you look at the monthly chart and you say to yourself, okay, look, we kind of opened here, we've come down, we've come back up, sorry, we've opened here, we've come down, okay, and then we've come back up, and you can see that we're getting a little bit of, a little bit of a push higher. So, if nothing else, we could look at the monthly chart and say when this particular candle opened, okay, for this particular month, the candle opened and it went all the way down, but then it started to go all the way back up again. Okay, and then we have a small section of price action that, if it gets completely devoided, like erased, sorry, that's rejection. Doesn't matter which way you look at it, it's rejection. So it's showing an upward pressure of price action. Okay, now it's very easy to use different terminology, and to try and illustrate certain things. But the reality is, if price was going all the way in one direction, then it's completely reversed and gone in the opposite direction. That tells you something. Yeah. If you can't use that information, that's fine. It doesn't matter. It still tells you something. Okay. Because, for example, example over here, same sort of concept. Price was up here, it came all the way down, reversed, finished the month here, and then the next month it still continued going lower. So you can't really gauge just on one candle, but it's a good start. Yeah, that's what I'm getting at. It's a good start. Yeah, so we can see that we came from down here. We've had a really nice push higher, 2 bar relief. 4 months of kind of grinding, slowly but up. Yeah, and then we've had a nice pullback here this month, and a little bit of rejection, okay, and it's come into these 2 down candles, which is important. Now I've noted this high here, it's gone through this high a second time, clearing the previous high as well, and then obviously we have a very small inefficiency up here, and this is where I believe, personally, that price is going, okay? This is on the monthly chart. Now when we go over to the weekly chart, you look at the weekly chart and you say, okay, great, but the weekly chart doesn't tell me that. The weekly chart, excuse me, the weekly chart is telling me, we've had a really nice push lower, okay, reversal up into this up candle, and then we've opened. Obviously, it's only one day now, so we still have the rest of the week. Plenty of news coming out this week, okay? But that, for me, this very easily could come down as well, take out the low here, okay, or it could very easily just keep going higher and reverse. That's the cutoff for me right there, okay. So 97.40, 45, 97.50, that's the cutoff. I wouldn't really want to see price much past that if I was just using the weekly chart as a directional bias tool, okay. So we're bullish on the monthly, we're bearish on the weekly, okay, or at least I am anyway. Okay, I'm not telling you that that's the case, that's just what I see. Now when we look at the daily, what do we see? We see we've had a really nice push lower, okay, very, very strong aggressive bar down, takes out all the liquidity, any inefficiencies have been filled, capitalizes this down candle here, and then we get a really nice reversal, okay, into this up candle. So we're stuck between two fractals. Now, if price gets through this point, okay, 97.16, let's call it 97.15, then I would expect price to continue going higher and at least fill in the inefficiency up here, okay, and take us up to at least 97.60, okay. So on the daily per se, we're neutral. So think about what I'm saying. I'm saying on the monthly we're bullish, on the weekly we're bearish, and on the daily we're neutral. So when you have a situation like that, it's very difficult sometimes to gauge which direction you should be trading in. And sometimes the best thing to do is to take a step back and allow one of these levels to be traded to on a lower time frame, i.e. the daily, which will then affect the weekly, which will then affect the monthly. Yeah. So when you see this progression of price action on the daily chart, which is the best one to use when it's when it comes to waiting for something to happen, because you can see information on a daily basis. You check the daily candle at 10 o'clock GMT time. We get the crossover. Or at least that's what it is for me. It closes at 10, but the crossover is at 11 o'clock for me because my platform's 1 hour forward. You can see up here, yeah, that's the actual time, and this is the platform time. So my platform time's 1 hour forward. So I get it at 11 o'clock. But either way, in the evening, okay, close to midnight, you check out the daily candle, and you can see this on a daily basis. So you can see the progressive move as price is moving around, and then you go to the weekly at the end of the week, and you say, okay, how did this week's bar move around? How did it form? What was it doing? Was it filling inefficiencies? Was it rebalancing? Was it more bullish? Was it more bearish? And so on and so on and so on. And it's the same with the 15, the hourly, and the 4 hour. You can see, the hourly bars broke up into 15-minute bars, easier to see. You can see the 4 hour bars broken up into hourly bars. You can see things a little bit clearer. So you have to understand the relationship between these higher time frame and lower time frame, analysis time frames, the monthly, the weekly, and the daily analysis time frames. I personally use the 4 hour, the hourly, and the 15-minute as an intraday tool to take intraday trades, with the hourly and the 15-minute being my entry time frames. So just some things to think about, when you're looking at things that are not all lined up the way you want them to be. Okay, don't always jump into things. Allow things to unfold, allow things to form in a way that makes sense to you. Now, you may be looking at things differently. Some people might have their indicators. Some people might use supply and demand. Some people might use, the different tools and concepts and techniques, right, to find directional bias on their trading, on their trading days and stuff. But for me, this is the way that I look at it. It seems to work for me. Has worked for a while. So, like I said, I think if you take your time and allow these levels to really sort of unfold, then there will definitely be plenty of movement. For example, if the daily gets above this level, okay, the 97.15 level, and stays above this level convincingly, then I'm expecting 97.62, and I can jump over to the euro, and I can see how the euro is moving around, and I can get a better entry, and I can time my entry based on the fact that price will be here going to here, as opposed to trying to guess where the price is going to go from here to here. Now, let me be very, very clear before I shoot off. Now, I'm not saying that just because price gets through 97.15 that it's going to go up here, but it's you have much higher odds of that actually happening if it does. If it doesn't, then we wait and be patient. Okay, so I'll just quickly show you the euro trade that I've opened. So this is euro. I have taken a trade into. Okay, let me just zoom in a little bit. Okay, this level here. Effectively, that's the cutoff for me. Don't really want to see price much past this point. Okay, so the 112. 39 or 112.40. Okay, so I'll put my stop at 112.55. Don't want to see price go much past that point. It is quite a tight stop, and I'm expecting at least these lows to be taken and some of this inefficiency to be filled down here, assuming obviously that the dollar does what I expect the dollar to do. Okay, so that's where we're at. This is a study trade. This is not a trade that I'm taking on my main account at all. It's just a normal study trade. It's just something that I want to sort of monitor, keep a track of throughout this week, and I like to have trades open most of the time, because then it forces me to kind of keep on top of the market, market movement, market conditions, and things like that. Okay, because sometimes I don't have, I don't always have time. In the evening I do, but I don't always have time throughout the day, to stay on top of things. So what I'll do is I'll jump over to my mobile, load the app up, and I'll just kind of see what the positions are doing. And because I've done the analysis beforehand, I'm in this trade. So when I look at this trade on my phone, I kind of know where I'm at, in terms of analysis, where the dollar should be, and so on and so on and so on. All right. So that's that, guys. I'm going to leave it at that. The fan has definitely kicked in because I can hear it, so I do apologise if that's really loud. And I will sort out a microphone. We'll get that sorted out at some point this week, so I can continue to do the videos in a nice and clean environment, so the audio is better. And I will catch up with you guys at some point in the next couple of days. All right, take care. Hope you're having a great day, and I'll speak to you soon.